You've got amazing products, customers are trickling in, but that next level growth seems just out of reach. Inventory needs a boost, maybe some targeted marketing to explode those sales figures. But where do you get the capital to make it happen? This is where Shopify Capital enters the scene. They offer funding specifically for Shopify businesses, promising fast access to cash to fuel your entrepreneurial fire. Sounds too good to be true, right? Well, one of the biggest questions you might have is, does Shopify Capital do a credit check? This question can be a major hurdle for many business owners. Building credit takes time, and a bad score can feel like a scarlet letter, shutting doors to opportunity. So, if Shopify Capital skips the credit check, that's a massive advantage, right? Absolutely. Here's the deal. Shopify Capital's approach is different from traditional lenders. They prioritize the health of your store over your personal credit history. Let's unpack this and see what it means for you. Why does Shopify Capital skip the credit check? Traditional banks and lenders rely heavily on credit scores to assess risk. A low score suggests you might struggle to repay the loan, so they're less likely to approve you. This can be frustrating for new businesses or those who haven't had the chance to build a strong credit history yet. Shopify Capital takes a different approach. They understand the unique challenges of running an online store. Your credit score might not tell the whole story. They'd rather see how your store is performing. Are sales going up? Do you have a good track record of fulfilling orders and keeping customers happy? So what does Shopify Capital look for? Here's where Shopify Capital gets its intel. Sales history. This is a big one. They want to see consistent growth or at least a clear upward trend in your sales figures. Payment disputes and chargebacks. A high number of chargebacks can be a red flag, indicating potential issues with product quality or customer service. Engagement with Shopify. Do you actively use the Shopify platform and its features? This shows you're invested in running a successful store. Store and buyer engagement. Are customers interacting with your products? Adding items to carts? Leaving reviews? High engagement suggests a healthy store with a loyal customer base. Failed billing attempts. A consistent number of failed attempts can indicate issues with your payment gateway or pricing structure. By looking at these factors, Shopify Capital gets a much clearer picture of your store's health and your potential for success. But wait, is a soft credit check still possible? There have been some reports of Shopify Capital using a soft credit check in certain situations. A soft check doesn't typically impact your credit score, but it's important to be aware that it might happen in some cases. Shopify Capital's focus on your store's performance over your credit score is a major advantage for many online business owners. It opens doors to funding opportunities that might be out of reach with traditional lenders. Here's the takeaway. Shopify Capital prioritizes your store's health over your credit score. They look at sales history, customer engagement, and platform usage to assess your eligibility. A soft credit check might be used in some cases, but it typically won't affect your score. If you're looking to take your Shopify store to the next level and traditional lenders seem like a dead end, Shopify Capital is definitely worth exploring. Do your research, understand the terms and conditions, and see if it aligns with your growth goals. With that said, thanks for watching, and until next time.